Hello, hello. How are you all doing today? There we go. So I hope you all had a delicious lunch. My name is Sebastian. I'm a mobile marketing specialist here at Adjust. We have an absolutely awesome panel lined up for you today that hopefully we're going to provide some cool insights into the growth of finance apps and the challenges that they face, but hopefully these insights are going to be applicable across the different verticals that we have here today. So to start things off, first of all, Mark, Mike, and Vishal, thank you very much for being here today. If you could please introduce yourself, say a few words about the company that you represent, and then maybe we can start off with you telling us what your top non-finance app is and why.
You want me to go? Okay. I'm Vishal Korlipara. I work at Credit Karma. I'm a growth marketing manager there. Credit Karma, we're trying to champion financial progress for everyone, just kind of make people a little bit more financially literate and help improve their financial situation. My favorite non-finance app, you said?
Yeah.
Okay, this is going to be real bad, but ESPN Fantasy Football is great. It's what I'm using all the time now. So yeah, that's my number one.
I'm Mike Van Kempen. I'm the current COO at Unest. We are a college savings app that allows parents to open a 529 plan for their kids in less than 5 minutes. Prior to Unest, I ran user acquisition at Acorns for 4 years. And my favorite non-finance app, I would have to say, is probably Airbnb. I travel a lot. It's a great app. I haven't tried out the experiences yet, but I'm hoping to do that soon.
I'm Mark Powlen, the VP of Growth at Daly. Daly is the world's first fully automated debt manager. So basically our goal is to get our users out of debt as quickly as possible. The long-term vision is to automate as much of your financial life as possible, but we started with debt. I'm a little bit sick, so I apologize if you can hear that. And my favorite non-finance app, I want to say Spotify, but embarrassingly, I think if you look at my screen time, it's probably TikTok.
We'll get into TikTok a little bit later. I kind of know why. To start things off, Liftoff has reported that the growth of finance apps, the downloads of finance apps, has increased by 354% in the past 5 years, and that $1.3 billion are processed daily in the mobile finance space. So I think it's fair to say that the growth has truly been explosive. Mark, starting with you here, you've been in the space since 2015, I believe. How have you seen the industry evolve to be where it is today?
Yeah, that's an interesting question. I was actually talking with Mike about this last night, about how over the past few years, kind of at the beginning, there were maybe only 1 or 2 or 3 apps out there that were spending a significant amount of money acquiring users in the space. And in the past year and a half, there's been an explosion of different products, all offering things that are kind of in the similar vein. And so it's really a double-edged sword of how things have changed over the past few years. So at the beginning, it was great because it was less crowded and less competition, but you were trying to explain and convince somebody about something they have never heard about, that it's trustworthy and you should give us all of your financial information and your social security number and your credit cards, and right. So it was a challenge in the sense that it's like this new thing, and people are unsure of whether they should use it. But as more and more people enter the space and the message is out there more and more, it's a benefit because people become more and more comfortable interacting with these products. And if you are able to kind of be the owner of the category, I think the new entrants are actually beneficial. And so we spend a lot of time thinking about how we can own a category, how we can truly differentiate our message from other products.
Awesome.
I had one more thing.
Yeah.
I think one thing that's also changed is some of these like older financial institutions have slowly but surely like opened their doors a little bit more. In the past, it was very closed doors. Sharing information from them to other private companies was like never going to happen. And now more and more companies are being able to do that and have relationships with the banking institutions. So products actually can be even more progressive, which I think is another part of it.
Just building off of that, you could almost argue that like that has been a reaction from the established banks. It's almost like you have to evolve, otherwise you're gonna completely sink. So it's almost a testament to the success of finance apps in general that it's now causing these wider impacts. So just building off of that point, 2019 has been reported to be the year that mobile is going to beat desktop web for people's preferred channels of banking. Mike, speaking to your experiences from Acorns, what sort of specific like product or marketing strategies did you have in place to sort of ease that transition for people?
Yeah, so at Acorns, when we were building our banking product, we looked at the traditional banking system and we asked ourselves, like, what's wrong with this? And you know, most of the big banks, the Chases, the Bank of Americas, they make most of their money off of customer mistakes, right? So overdraft fees, which were $12 billion last year, ATM fees, international fees, everything you do with them is a fee, right? And so we wanted to get rid of all fees. And so that's sort of how we built the product. So with Acorns, you know, you will never encounter a fee besides the monthly, you know, $1, $2, or $3 a month subscription that you chose. And on top of that, we had to make the transition seamless. So when we built out the product, we had to have, you know, mobile check deposit, we had to have bill pay, we had to have, you know, seamless direct deposit switching. And so we built it out in a way that was really easy for the customer to make that transition in just a few minutes. And on top of that, like we implemented some other strategies, like a lot of other fintech companies went the route of like going with no ATM fees if you take out of an ATM within like a certain network of like 15,000 ATMs, right? Yeah. We took the approach of we don't care where you're taking out money, we're actually gonna pay the fee, whether it's at a concert, on the Vegas Strip, like wherever it is, like we're gonna pay that fee to make you have access to your money like wherever you want. And so with those value props, and also on top of that, we partnered with Ammunition, who's actually a San Francisco-based design studio. They did like Beats by Dre, the Square POS terminal. They've done a bunch in tech to design like a really cool card that people are proud to use. Yeah. So it's made out of tungsten. It weighs more than like the Amex Platinum card. 90% of Acorns users make under $100,000 a year. And so we wanted to give that everyday user, that everyday American, a card that they really felt proud to use. And so with all of that, we had, you know, great success. When we launched our wait list, we actually sold out of our supply of cards we had in less than like 72 hours.
That's so cool. It's so crazy that you just said that. I got the Apple credit card. I'm not sponsored or anything, but people ask me what the best thing is. When you drop that thing, the noise that it makes, just like the satisfaction of that is, you can't really, you wouldn't even think that that was something worthy, but for like a product decision, especially as we're transitioning, these things matter. Yeah. And really paying attention to that as you're looking for new revenues to grow really makes sense. Yeah. Sort of building off that, Vishal, there are growing sectors of today's youth whose first interaction with financial services are completely mobile first. And this is also true globally in developing nations that don't have the structures or institutions in place that are the same here. How have you found that process of marketing to them, and what sort of ideas have they responded well to as a result?
Sure. I think it's like a two-part answer. So like the first part is product. I think most importantly is accessibility and education. So I kind of spoke to financial literacy being like a number one like reason to believe in Credit Karma. And So one is most younger people don't really understand finances, what's good, what's bad. I would argue a lot of people in general don't understand what's good and what's bad. But yeah, so like one is like providing that as a free, providing Credit Karma as like a free resource is like a huge element, right? So just from the product perspective. From a messaging perspective, it's actually, I think, really channel oriented. It's like, where do we actually reach these people? Are we reaching them on TikTok? Like, I know you're on there, but I mean, also the younger people are on there too. And TikTok, Snapchat, some of these other like channels that are actually a little bit more tailored to them. And then having, user reviews that are, again, tailored, like are from young people for young people, those kind of things.
That's awesome. Is there anything that you guys could add to that?
I mean, at Daly, Daly for a long time was mobile only. And so still everything that we design from a product perspective is mobile first. And I mean, we find that having everything optimized in that mindset just makes a huge difference, obviously, in onboarding and the experience and how and what information you can surface, because it's just a much smaller area. And so making sure that the design is focused on that, so it's not a very overwhelming experience, is really important, particularly in finance, where there's a lot of anxiety associated, and especially with debt and some of the other challenges in finance. The anxiety is a huge component of it, and so how you reduce that through design on a mobile screen is really important.
Awesome. So I think we've slightly touched on this a little bit, but the mobile finance world is becoming increasingly saturated, but this is also the case across verticals. What specific challenges do you guys face as growth professionals, as mobile marketers, to be able to cut through this noise and differentiate your product? And also, what impact is this saturation having on your acquisition costs?
Yeah, so when I took over user acquisition at Acorns, you would go to the top 20 in the finance section of the App Store. And it would be the peer-to-peer payment companies, the Venmos, the Cash Apps. It would be the big banks, and then it was like Acorns, Robinhood, Stash. And it stayed like that for a while, and then probably 18 months ago, you started to see more and more fintech companies pop up there. You had Dave, which just became a unicorn last week. You had Chime, you had Earnin, you have Digit, you have just all of these awesome companies, which at the same time, we're driving up our costs. And so what we did to combat that is we really, really doubled down on like our creative efforts. And so while we were previously, pumping out maybe 5 ads a week, we probably increased that to like 50 different new concepts every week that we were testing, because we saw about 95% of ads failing before you got like the one that really, really did well from an efficiency standpoint. And so, yeah, I mean, for us, we really just doubled down on creative, and we actually saw our acquisition costs decrease once we got things into a good place with that.
Wow.
Yeah, this is an interesting question for sure. The challenge is that, at least for us, is that anybody can make a claim. It's how you prove that and how you actually get somebody to experience it quickly is what makes all the difference. And so it's unrealistic that from an ad, you're going to be able to explain everything that your product does. People just don't pay attention that long. And so we also spend a lot of time thinking about, like, what is the purpose for each step in the funnel, and recognizing that at each step you might only be able to get somebody to understand or experience 1 or 2 things at most. And so for us, it's like how quickly can you cut through the noise and capture attention, and then how quickly can you get them to a differentiated experience? Because maybe they have tried other products, and maybe they're willing to try multiple products. And so you might not be able to differentiate fully on just the top line messaging, but how quickly you get somebody to an experience where they're like, okay, I really see how this is different than everything out there, has been super important in controlling kind of the cost and conversion through the funnel.
Yeah, I actually echo a lot of what you guys both said. One other element I think is leveraging your first-party data to actually re-engage. And it's not just about acquisition anymore. It's also about how do you bring people back that have signed up and make sure they're actually using your product regularly. And they also on the messaging side, I think we're both saying the same thing where finding a messaging in finance, the right messaging isn't easy. It takes a lot of work, iteration, and like effort to get there. And then once you find it, then you can try to kind of scale that messaging and until you'll unlock a new one. And so I think a lot of that resonates exactly with Credit Karma too.
Awesome. So building up off that question, we are also seeing that the cost of acquiring activated users, so users that are further down the funnel, are increasing as well. With that said, how are you balancing the push towards acquiring new users versus really paying close attention to retaining your current client base and the possibility that they may be more profitable as well? Like, how does that balance act work out? And not only that, how do you then evaluate the success of these campaigns? Like, what certain KPIs are you looking at? Is it going to be a short-term or a long-term sort of process for you in that evaluation?
So our product might be a little bit unique for this question. So we have 99% retention rates for almost every single one of our cohorts. So retention has never really been an issue for us on the current product that we have. And so we have focused most of our efforts on conversion. And because the retention rate is so high, we're pretty confident if we can get users through the funnel that they're going to be valuable to us. And so a lot of our efforts have been focused on the conversion side, in funnel and out of funnel. And a lot of it was kind of what we were talking about earlier, is like, how do we make sure that we continuously cut through the noise from a creative perspective? How do we continuously improve the funnel and the messaging and the experience? And it's not a static. It's not static, right? So like, I've been at the company for a little while, and as you move through kind of very early stage users and early adopters, what works for them is not going to work for the next set of users, and to reach the general population is not what is going to be what worked for the original set of users. And so for us, we focus a lot of that in the conversion funnel, and how do we like adapt the way we're explaining and showing the product to kind of broader and broader audience sets.
Okay, I'll go. So ours is, again, I actually echo a lot of the stuff you said as well, Mark. I think one cool point for you is if retention's so high, then your cost per acquisition, what you can spend on a new acquisition is actually significantly higher too. So that's pretty cool, right? But for us, I think getting people in the door has always been free credit scores. So offering that like huge value prop that like kind of changed the credit score industry has got people in the door. However, free credit scores don't pay the bills. So, so it's kind of like, how do we now diversify our product like down funnel and keep people engaged using our first party data? So it's like, hey, if people come with a credit score and we know they're in the market for a home, let's make sure they see our mortgage product and our comparison shopping and getting the best deal when they're in the market for something like that. So just really diversification and bringing people back. Yeah.
Yeah, I think at Acorns, early on, we made the mistake of like having creatives that would perform really well. We'd get people through registration, and we'd sort of double down on similar creatives, but down funnel, right? Once you started to look at 2-month, 3-month retention curves, it wouldn't be necessarily as good. And so I think it is really important to not only like monitor, obviously, like what's going on in like the initial stages of the funnel, but also you have to really monitor the quality later on, because yeah, I mean, I'll I'll give an example. Like, we found like informational ads, so showing how, you know, saving over time can really help your future, resulted in really, really expensive like top of the funnel. Really expensive like cost per registration, but actually down funnel, it performed better than a lot of some of our other creatives, just because those users came in and they were so engaged, and they wanted to actually make a difference in their financial future, and they stuck with it. And so I think it's important to monitor your metrics at all points of the funnel.
Yeah, that really makes sense. So it's not just at that first stage, but like further down, how much value are they going to bring? And that value is going to justify that initial higher cost. Okay, this was touched on earlier in the panel, in the sessions. I know it's a hot topic, but we're going to have to speak about it. Security and privacy. It is probably the hottest topic out there right now, not only because the finance world is obviously collecting a huge amount of personal information. I had to put in my social security number. I still don't really know what that means, but I had to put it in. On top of that, we are operating within the context. GDPR is in full-fledged in Europe. CCPA is around the corner here. What sort of impact, you don't have to talk about like the specifics of your company, but what impact do you envision these changes to have in regards to just marketing and growth strategies in general? Where is the space going to evolve to as we're now operating in a more privacy-aware environment?
That's a good question. So security is obviously super important. We ask for a ton of very personal information. So that was, you know, every best practice you can imagine and probably more is like built into the core of the product. So that's kind of less of an issue, but it's how you convince somebody that it's secure is more the issue. Yeah, in terms of the new laws in California, look, I'd be lying if I said it's not annoying. There's a lot of kind of compliance things that we need to deal with and adapt to. But the way we think of it at Daly is that we actually welcome a lot of the regulations because we have followed all of them and we have a pretty strong compliance practice. We've gotten all of our licenses in every state in which we operate. So we actually think that regulation in this space is actually good for the end user. And our hope is that there are a lot of bad actors out there that you have to compete with in somewhat of an unfair way, because just the reality is that not everybody follows the rules, and you can see that blatantly on a lot of the marketing materials from other companies that are out in the space. And so as there's more and more scrutiny, for us, that's actually good, because the hope is either the other companies will be forced to comply or the other companies will no longer exist because they're breaking the law.
I think in the finance space, it's really trust isn't an option. It's very binary. It's like you don't get respect for being trustworthy. You're just expected to be trustworthy. So people don't even consider you if you've had issues in the past. And I think there is people, very recently, stuff that's happened that's been in the news, like with Equifax and stuff, that you'll see that like these really change companies' like livelihood in a big way. And so for us, we have a very thorough security and compliance and legal team that ensures all of this stuff. But I wanted to speak to kind of the GDPR, CCPA stuff that's happening right now. And that actually, from a lot of the growth people that are here, will have a much bigger impact, I think, on like a tactical basis. So retargeting people based off cookies, I think eventually is going to slowly but surely be becoming less and less of a tactic that you can use as these things come into place. Or you have to get really smart about how you're doing it. But I think, again, with Mark, I agree that it's better for the end user, and that's what we should all be thinking about when we're thinking about marketing apps in the first place. So I think it's a good thing overall.
Awesome. Appreciate your answers there. We have 3 minutes left. One last question I think is applicable for everyone in the room is that I'm fairly new to the space. I've been speaking to a bunch of UA managers, and they're saying a lot of the processes that they are just doing in their day-to-day job is incredibly time-consuming and just frustrating. What would you say would be a situation like that, and that would be best solved in regards to having that automated to free up time and just people to think on more creative solutions?
Sure. Like I wish we could automate our creative process, just because that is super time consuming. Like I mentioned at Acorns, at the end we were pumping out like 50 new ads a week, and actually Hopper's a really good example. Who they've automated their creative process completely, which is really cool. And so I mean, if I had to automate one thing, it'd probably be creatives.
I was joking with them earlier. It's getting really time-consuming to keep knocking on everybody's door and getting them to sign up for the product. So if somebody can figure out autonomous cars that also do door-to-door sales, that'd be great.
Yeah, I was going to say reporting and PowerPoints, that'd be great too. No, but I mean, honestly, I think creative's a great example. Just something that if you can do it in a really smart, dynamic way, which some companies are doing, then that could benefit everyone drastically.
Okay, awesome. I think we'll open it up for one question. We've got 1 minute left, so if anyone in the audience has a question for our panel. Anyone? Hey, we got one over here. Just give 1 second. Your mic's right behind you. There we go.
Yeah, I was curious about how, I mean, given the competition in the space, how your marketing mix may have changed over the last couple of years in terms of which channels you're seeing, more growth in or more effectiveness in.
Yeah, I can go. So we actually have seen the most growth come from the kind of newer social channels specifically. So kind of playing where the CPMs haven't maybe reached their maturity yet. And so trying to be a first mover in some of these new spaces.
I think we've got a TikTok lover over here.
Just the user.
Yeah. I think everyone should download the app and scroll it once tonight. I did it yesterday, and it's a mind-blowing experience. For your marketers and growth engineers out there, it's interesting for sure. So I just want to thank all my panelists. It's been awesome having you up here. Thank you all for listening, and have a great rest of your mobile spree. Feel free to come speak to me or of any of us afterwards, and I'd be super happy to talk to you about Adjust and what we do here as well. Thank you.